Welcome to the Wealth Flow. My guest today is Chris Younger. Chris is the founder or co-founder of Class 6 in 2005 with a mission to empower the entrepreneurial spirit, sharing a passion for what entrepreneurship means to our community. And then Chris felt Class 6 could do a better job for business owners by integrating personal and business planning and taking a holistic view of the entrepreneur's journey. Chris, welcome to the
Thanks
show.
so much, Keith. Thanks for having me.
Yeah. So before we dive into uh, your Class 6 and all of that, Chris, really where I like to start with everybody is just, where did you grow up and what got you into entrepreneurship?
Well, I grew up in Ohio. Go Buckeyes. Yeah,
Okay.
just
Yeah,
I don't
there
know
you
if you
go.
watched the Notre Dame game, but pretty exciting.
Right, right.
And then I went to college in Ohio, and then I went to law school out east, and then was a lawyer for a couple years. And I wasn't very good at it, so I decided I probably should do something different. And then I worked for an investor group out of South Dakota, of all places, and help them invest some capital into a couple of consolidation strategies, one of which I was pretty deeply involved with, a company called Exponets, we became the nation's largest value added reseller of communications equipment. So think phone systems, data
Hmm.
networks, that type of thing into the small and medium sized business market. And I started off as the deal guy. Like I said, I practiced law for a couple years and jumped off the kind of law partner track. And we did 27 acquisitions over about 24 months. And so it was
Wow.
a lot of deals. And you doing that many deals that quickly, you learn pretty fast, and you learn quite a bit about what makes for good deals and what makes for bad deals. And then we built that company. I ultimately became the president of that business, and we sold it to Avaya, which is a big communications company, in 2003. Tried to retire for a couple years. My wife decided that I needed to find a hobby. She didn't. I think she and I both wanted to stay married, so I needed to get out of the house, and was definitely too young to retire. And then with my business partner, we founded Class 6 under a different name back then, but and was really we were going to do that as a hobby to just to do a couple deals a year. We loved working with entrepreneurs, and so and today the business has gotten a lot bigger. We have about 50 people today, and we do kind of three types of business. We have a piece of our business that is the investment bank. So that basically manages transactions for entrepreneurs who are looking to sell their company. We have a consulting group that helps businesses get ready a year to 5 years ahead of time. And then we've got a family office that helps the entrepreneurs on the back end manage the money once they've sold their company. And so we've had a really, really good
Hmm.
run. We've got a super talented team. As I think Warren Buffett says, I tap dance into work every day because I get to work with entrepreneurs every day. It's awesome.
Yeah. Do you specialize in a certain type of business, or what does that look like with?
So our Class 6 is a generalist firm, meaning we work with businesses in a variety of different industries. That said, we've done a lot of deals in the software space. We've done a lot of deals in consumer products, manufacturing, distribution, and B2B services. But we're a generalist firm. There are certain industries where we're just not equipped to do much work. Oil and gas is one, or biotech, ones that require
Mhm.
pretty specific expertise or understanding that we're just not smart enough to do. So
Yeah. And you mentioned that when you work with companies and entrepreneurs 5 years before, and I assume 5 years before they intend to sell.
correct.
And if so, what are some of the biggest things that you don't see in place that you'd like to see in place that makes it a more saleable business?
Yeah, there's a lot that goes into it. The first thing for any business that we start with is what's the industry? What are the tailwinds in the industry? And is that going to make selling the business harder or easier? There are certainly some industries that enjoy really good interest levels from investors. any industry or business model that's recurring revenue, that is relatively high margin, that's high growth, those are all going to help the valuation of a business. But then when you look at a company individually, it really boils down to, I like to try to keep things simple for myself. It boils down to, one is, how credible is that growth plan of that business? Meaning, how believable is it when you think about what they've got to accomplish to hit their growth targets? And the second piece is,
Hmm.
what are all the things that are going to get in the way of that growth? We call them risks. And we've identified about 100 different risks that can make it harder for an investor to get comfortable with an acquisition of a company. And we've developed all kinds of tools and assessments to help business owners understand, hey, how is a third party professional investor going to look at your business? And with that knowledge, hopefully they can take some steps today that make that business a lot more valuable when they do go to market. The biggest ones that we see are, the business is way too dependent on the business owner. They may be the primary
Right.
salesperson or the primary operations person, the one who does all the product development, creative. And those businesses are inherently risky because I think most sophisticated investors know that once an entrepreneur has liquidity, their motivations change, and
Hmm.
they may or may not be interested in staying with the business. And so that makes those businesses really, really risky. The other ones that we see are, I think a lot of small to medium sized businesses lack great financial controls that are basically, I don't know if they'll necessarily drive increased value in the company, but they definitely paint the business in a good light when investors are looking at it. That will give investors a really positive impression of the business, that they've got their act together. And that can shorten due diligence periods in particular. A lot of businesses
Right.
are way too dependent on a single or a few customers. And that's typically a point of disagreement, or not under, a lot of our clients don't understand why that's a big deal. But once you walk them through, typically those customers are there because of some relationship. And, again, if you as the owner disappear or management changes, those customer relationships could be in jeopardy, which could put the business in jeopardy.
Right. Okay. Yeah, interesting. And what size businesses are you typically working with? And I guess who are we selling them to? Is it selling them to another entrepreneur that says, I want to have this business, or selling them to, a bigger conglomerate, or what does that look like?
Yeah, our typical deal size is about $70 million. So these are typically institutions. So that could be a private
Yeah.
equity firm buying them, or a larger business. In, when interest rates were at zero for the Fed rate, we saw private equity being very aggressive on valuations, and they won most of the processes that we ran on behalf of our clients. Today, that's starting to shift back a little bit. We're seeing more what we call strategic buyers. These are larger companies that might be a public company, might be a large private company. They're winning more of the processes that we're running today. And so, again, the for smaller businesses, maybe a deal less than 10 million or less than 5 million, those typically would be sold to another entrepreneur, another individual. But
Okay.
that's typically not where we play. We just don't have that base of potential buyers there like we do at the larger size.
Yeah. Okay. And so, what are some of the, I guess, more popular type businesses? You said you did a lot in kind of software and technology, but where's the market right now?
Lots of interest. Again, any business model where there's recurring, predictable revenue that is relatively protected during a recession, those businesses are
Hmm.
very attractive now. We're doing a deal right now that is in the basically, they provide analytics and capabilities for hospitals, schools, nursing facilities to help screen candidates. And that business, during the last couple of recessions, has been just fine. Those businesses,
Right.
the end markets tend to do pretty well. We just did another deal that was in the software space for the government. That's another area which is, again, fairly predictable. It's typically going to do well during the recession. pretty sticky relationships with customers. And so those high quality businesses in today's market are really attractive. And typically, when the market starts to tighten up a little bit, you get what we call a flight to quality, which means that the really well run, uh, profitable, nice growth businesses, those are going to attract a premium just because there's there's going to be a lot more interest in those companies given the nature of the economy and what people might expect in the next year or two.
Okay. Okay. Hmm. And as far as when you're selling these businesses, what size? Yeah, I know you said millions of dollars here, but like as far as the size of the company, generally, how many employees? Is it the original founder that's still kind of running the show, or just kind of varies?
In most cases, we are representing the founder. It's
Okay.
typically it's a founder led business that they've owned for 10 to 30 years. They've in terms of employees, that varies pretty significantly, but somewhere in the 25 to 250 employee range. Revenue ranges
Okay.
typically 10 to 15 million and north in terms of revenues, up to we've sold a couple businesses that were 3 or 400 million in revenues. They tend to have a lot more people as well. Those are 250, 300 people.
Yeah. Okay. Interesting. And so tell me a little bit about Class Six and what, obviously beyond just the, helping people in advance of selling their business and kind of putting all the pieces in place. What else, does Class Six do?
Yeah, once we've worked with that business owner, at some point, the timing is going to be right for them, both personally with respect to their business and hopefully the market's cooperating. Then they transition over to, we have an investment bank, it's a broker dealer that would take that business to market. So they package up the story, they identify the bidders to reach out to, and then they'll take that company to market, present the story to them, these investors, and then run what we call an auction process where we're getting hopefully multiple bids, and then
Hmm.
coordinating the negotiation of those bids and due diligence and so forth, and then managing those to closure. So that's really the job of our investment bank. They'll manage from 15 to 20 deals a year, and then on the back end, we have a family office, which is a registered investment advisor. That team typically will get involved with the entrepreneur well before they're going to sell. There's lots of opportunities for tax, both estate and income tax planning, that we can have an impact on how our clients do on an after tax basis with respect to these transactions. And then we'll manage money for them. We have about $1 billion in assets under management with respect to those clients. And for us, one of our core three core values are hustle, humility, and relationships. And the family
Right.
office really allows us to keep relationships front and center. And we get to have that relationship with that entrepreneur, hopefully for the rest of their life and hopefully their family's life.
Yeah. Yeah. For sure. And as far as investment advice, when it comes to the family office, are they investing in other businesses, or what? Are they helping to kind of put these prior owners' money to work in other categories, real estate, something like that?
Yeah, typically, I mean, a good chunk of it, as I like to say, our clients, uh, as business owners, have taken a lot of risk in their life, and so part of our
Hmm.
job on the family office is to reduce their risk profile so that they never have to work again. So we're typically going to be
Right.
invested in a fair number of public securities, both debt and equity. Then we may have them in different private equity funds or different real estate funds. They'll come to us often with, "Hey, I'm looking at an investment, a private investment in this particular company. What do you think?" And we'll help them think through that. But in general, again, they've gone from highly concentrated, pretty risky asset to a much more diversified portfolio where, we're really managing to make reasonable returns, but also to make sure that they never have to go back to work.
Yeah. Yeah. Makes sense. Oh, that's neat. And then as far as geographically, are you pretty well all over the U.S.?
Yeah, we have
Yeah.
clients all the way from the East Coast to the West Coast, down south, up north, everywhere.
And what's the business environment like at right now? It seems, at least what I keep hearing is, you have it sounds like a firm like yours would be in huge demand right now. You've got a lot of baby boomers and people that are getting to that retirement age that have built these businesses, and now are ready to sell.
Yeah, there is look, just demographically, the baby boomers are retiring, and a lot of
Hmm.
I think I read that baby boomers control about, I don't know, 6 or 7 trillion dollars worth of private company value. And so obviously that value is going to transact at some level. Obviously, some of those businesses won't be sold. They'll probably be given, transferred to their kids or maybe to their employees, but a lot of those will get sold. And we've certainly seen a lot of deal activity. We had our busiest first half of the year I think we've ever had this year, even in spite of the market. And so, again, in this market where there's a flight to quality, we've been pretty fortunate by having really, really good clients to take to market, and I think that's kept us pretty busy. So we're enjoying what we're seeing.
Yeah. Okay. And so, what are some of the other things that you're seeing out there in the marketplace? And kind of tell us a little bit about what you're doing with companies.
Yeah, it's really comes down to for our clients, right? The ones that start with our consulting arm, we call it Pathfinder. It's really just helping
Hmm.
them optimize and identify, "Hey, here are the different risks or issues that we see with the company. Here are the things that you could do to try to address that. Let's prioritize those and get to work on those, while we're still growing the business and growing revenues and profits and all that." And then it's really, hey, we've got to make sure that as we're telling your story to the market, that that the growth that we're going to be forecasting for your business is highly believable, and that takes some work. Most business owners, at least that show up at our door, they don't necessarily have a detailed plan for what's going to come next year, let alone the next 3 or 4 years. And so there's a lot of work that
Right.
goes into what is that? What's that growth plan really look like? Who are the customers? How are you going to get to them? How much is that going to cost? Do you have the infrastructure necessary to support it? Do you have the people necessary to support it? And to go through that analysis with them is usually pretty illuminating for them, and it just helps us build a much more compelling story when we do go talk to investors, to give them, again, a story that they can really absorb and believe and sign off on, which hopefully allows them to pay more money for our client.
Yeah. Yeah. And so, Chris, are you working with any companies, maybe at the very infancy stages of building the business, in order for them to ultimately sell? Or are you primarily working with some that have already kind of built the business, but now it's just, taking it to the next level and getting it to a spot where it is sellable?
Yeah, we'll hit both of them. Within our Pathfinder consulting group, there's several different ways that we can get engaged. We definitely have clients that
Okay.
are fairly early in their life cycle they're just looking for big picture advice on how should I structure this business, or how should I think about different revenue opportunities or customer opportunities, and how should I think about building my team. And then we certainly have more mature businesses that, they might be a year or two away from wanting to go to market, and they just want to tidy everything up and make sure that the package is well put together before they do go to market.
Okay. What is one of the things that maybe you see, fairly often with a company where it's maybe something that is making it less marketable that you'd need to change?
Yeah, the biggest one that we see, Keith, is that, again, it's back to this, the owner's doing too much,
Dependent. Yeah.
and the team's not very deep. If you as an owner can invest the time and the energy to build a really, really talented team, not only is your business going to ultimately grow faster and be more scalable, you as an owner are just going to be a lot happier because you're ideally delegating those tasks that either you don't like or you're not very good at. And you're able to focus more of your time on what made the business successful to begin with. Because oftentimes what we see is a business owner, they're trying to save money, but they end up
Yeah.
doing more and more and more, which just from a quality of life perspective tends to get pretty negative pretty fast. You're working 90 or 100 hours a week. You're doing a bunch of tasks that you don't like doing. probably doing a lot of stuff that you're not very good at, but you feel like you have to. The moment that that owner can make that transition to building a team and hiring people who are much better than they are at their specific craft or their profession, that owner is going to be a lot happier and their business is going to be worth a lot more. Again, what we typically see and is for a lot of our Pathfinder clients coming in is, hey, we've got to go solve that equation. We've got to solve this people equation. And that takes some energy, and it takes some time and expertise, and it takes some forethought and planning on the part of that business owner because a lot of them aren't used to delegating. They're not used to having a team. And so there's a lot of coaching
Hmm.
on our end involved of, all right, here are the things that you need to be thoughtful about as you're building this team and bringing these folks on board to make sure that they're going to be successful, both in their roles, but also as a team, because that takes, again, that takes some magic.
Yeah, for sure. Yeah, no, that makes total sense. And I can see how an owner could get in a spot where they're just handling too much. What is one of the bigger or the first hires, or is it specific to that particular business? But what would somebody need to hire first to kind of put a little bit of distance between themselves and the daily operations?
Some of it will depend on the business itself in terms of what's going to be most valuable to that business. But typically, it depends on how complex the business is. But in a lot of cases, we're talking to that CEO about hiring a really good finance person, which sounds totally counterintuitive. They're not related to revenue, they're not related to delivery, but a good finance person is going to know what it takes to actually have a scalable infrastructure, both systems and people. And they're
Mhm.
hopefully going to be able to help that business owner forecast, here's the type of capital that I'm going to need to get this business into the shape that it needs to be in order to scale, in order to grow. And oftentimes, business owners will get the cart in front of the horse and invest too far ahead of the revenues or end up finding themselves really, really short on cash. And so I've had this conversation with, I can't tell you how many CEOs where, because this position, again, is not revenue generating, they have a hard time seeing the value. But once they hire the person, they usually call and ask why they didn't do that sooner because they can add a lot of
Right.
value.
Yeah.
The next one I would say is some type of chief operating officer, somebody that can, again, a typical entrepreneur, 2/3 of them are going to be there because they're either great at sales or they're great at product development. And for
Mm.
those CEOs in particular, having a skill set that complements them in a COO who can really help make the trains run on time and can institute process and can institute systems, that's going to be hugely valuable for that business and will allow that business owner to go do what they do best, which is either come up with new products that we can sell or go sell the next, 10 customers so that we can grow the business faster. And then after that, sometimes, hey, they need a head of sales or they need a head of operations or a head of product development. A lot of it will just depend on, hey, what skills are we trying to complement from that business owner so that we can get that business owner into a position where they're spending most of their time on stuff that they're really good at and that they enjoy and is going to add a lot of value to the business.
Okay. And what about from so let me think how I want to say this. What are maybe some of the other things? You mentioned earlier not having a 3 year, a 2 year, having a plan ahead of time. A lot of times people just get kind of in the weeds a little bit. I mean, they're doing the daily stuff needed, and despite themselves, they're growing in some cases, right?
Yep.
But what are some of the things that you work with them on as far as putting together a plan? And do you find that any of them? I know we just did a vivid vision for our company, and I found the exercise really, enlightening, and it really helps you kind of, crystallize, what direction you're trying to go.
Well, particularly if you have a team, you need to get
Mhm.
alignment. You've got to get people rowing in the same direction, focused on the same objectives, clear on what they need to do, right? What their role is in helping the company achieve its goals and mission. In order to be able to do that, you have to look out a little bit. That's really the job of a CEO, is thinking a year to 3 years out, and longer, about where's this
Hmm.
business going, where should it be headed, and then backing up and determining, well, what do we need to be doing, this year, this quarter, this month, this week, in order to make all that happen. And then coming up with the scoreboard or the dashboard or the KPIs that are going to give you, particularly, advance warning of what's coming. Are you achieving the things that you need to achieve today in order to make the tomorrow that you've kind of envisioned possible? And so that work, to the experience that you just had, should be really illuminating for folks in terms of
Yeah.
kind of being able to see a little bit of the bigger picture, being able to see more about how their role contributes to the success of the organization, and what their individual goals contribute to the overall goals. And so that whole process of kind of getting aligned around what we're all trying to accomplish, getting orienting around what that means in 3 years or 2 years or 1 year or this quarter, and then starting to figure out, well, how do we quantify success? How do we know if we're winning? All that work we find to be hugely valuable for companies. And again, oftentimes entrepreneurs are successful because they're muscling the company through to success versus having something that's more systematic,
Right.
process driven, team oriented. And so that's, to the point that you just raising, it'd be very gratifying and fun to do. And the added benefit is you're getting people oriented around that vision and that goal.
Yeah, yeah, makes sense. When it comes to talent and putting people into the right roles, does your company work with certain talent agencies that are try to find the right person for the job, or do you assist at all with that aspect of it? I guess is what I'm
Yeah, through our Pathfinder program, we've got a number of different partners who specialize in recruiting, or placement. And so, depending on the position and the industry, one of those partners would be a great fit for our clients in terms of needing to find whether it's a temporary person, a part time person, or a full time hire. Those companies are expert at going out and locating those candidates. And you want to find somebody who routinely deals with this type of dynamic, because it's not like hiring a vice president for Bank of America, where they're going to be going into a system and an infrastructure that's already established. These are people that are going
right.
into an environment that historically has been, handheld by that entrepreneur. And there's a whole lot of dynamics that go into making that transition successful. And the last thing you want to do is introduce somebody into the company only to find that there's organ donor rejection because the entrepreneurs just, they don't have the desire or the energy or the willpower or the skills to be able to delegate. And that's something that you have to spend
Hmm.
some time on first, is to really help that entrepreneur understand just how important it is to them to be able to delegate and trust in team and strategy.
Yeah, it seems like that could be something that would hold people back quite a bit. Is that any dialogue that happens before you take them on as a customer to just assure that they can in fact delegate?
Yeah, we're testing for that. We're testing for coachability. We're testing for values fit with us as an organization. We love working with entrepreneurs that are, high integrity, that where their team means a lot to them, where their community means a lot to them. That tends to overlap really well with our values, and that makes the work just a lot easier and a lot more rewarding for us and our team. And so, but we are testing for, I mean, the last thing we want to do is waste our time and our clients' money giving them counsel and advice where they're just not going to listen or pay any attention. We call it the smartest
Right.
guy in the room syndrome, right? If we have somebody that we're talking to where that's the attitude that, hey, there's nothing that we can teach them, we're very quick to let them know, hey, we're not going to be a great fit. We do our best work when we're collaborating with our clients. We're never going to know their business or their industry as well as they do, but we definitely know the transaction game and the exit preparation game. And so it's really, how do you combine those two knowledge bases most effectively for them to achieve what they want to achieve?
Okay. And tell me a little bit maybe about, as you're working with some of your clients, do you ever have situations where, you're taking an outside view of the business and you're saying, I don't know, you guys are spending a ton of time in this area or maybe even with this product, but the revenues and everything that we're getting are over here. And, kind of having to, sometimes a business can grow more from subtracting some piece of it, and really doubling down on the parts that are growing it.
Right before this podcast, I was on a call with exactly that conversation. I'm a
Really?
firm believer. Look, entrepreneurs, a lot of entrepreneurs, particularly product entrepreneurs, they are they've been successful because they have innovated. They have come up with new products to go to market. And like any of us would be, we're going to go to the playbook that has served us well, right? We are going to go to the strategies
Right.
that we've deployed in the past that have served us well. And for them, it really does it becomes much more around focusing, right? Where are we going to get the best return on our time and energy and money? And a lot of times it's not necessarily in a new product, it's taking that existing product and really supercharging sales. So we
Mhm.
move from being purely a product company to being a more of a sales and marketing company and support company. And so that's exactly right. We call it slowing down to speed up. Hey, let's make sure we're taking a pause and being very intentional around who are the customers we're going to deal with, what products are we going to sell to them, and how do we narrow our focus to such a point where we truly can be effective. I like to say as a business starts to get near 10 million, 12 million, 15 million of revenues, if you're not very focused, you'll kill the team because there's going to be so many workarounds and issues that come up because you're trying to do too much. And a lot of times it's much
Yeah.
better for them to do less and do it really well.
Yeah, makes sense. What about on the sales side? You mentioned sales a couple different times, and that being sometimes a spot where it's not quite operating the way it should be. Maybe there's needs to be some sales management in place. What are some of the levers that you're able to pull? When it comes to sales and you know helping them.
It's interesting when we see companies, uh, the DNA of a company is largely driven by the DNA of the founder or founders. If you have
Right.
a founder or founders who have been really, really successful in sales and that is their strength, I can almost predict, hey, they're not going to have sales challenges. They're going to have operations and quality control challenges. All right. So,
Right.
you
Right.
can almost predict, hey, where are the risks going to be in that particular business? So if you have somebody who is a product person, right, they're very innovative. They're coming up with new products. Oftentimes, hey, you may have operational problems or sales problems. They're sometimes the folks that assume that if I make a good product, it should sell itself. And so a lot of times it's, companies when they show up to our door, they just need some guidance on, hey, how should we think about what the next phase of growth in this business looks like and what's required to do that? And so then it's, hey, if we've, for example, if it's an operations person, that's their DNA. Again, their quality control and service levels are probably going to be great. Their growth is probably going to be less attractive. And so it really comes
Mhm.
down to helping them understand, hey, if you really want to hit the targets that you've set for yourself, we're going to have to bolster these other areas of the business where we may not have as much strength, and find the very, very best people available to manage those. And again, as an owner, you've got to be comfortable delegating and ceding some authority to them so that they can do their job well.
Yeah. Okay. And then so you've kind of got the whole process and typically you said, is it a 5-year window from when you start working with them, or does that vary as well? I mean, are there some businesses that you come into and it's hey, we could actually get this packaged up and sold in 2 years instead of five, or
Oh yeah. Yeah. It all depends on what the owner's trying to accomplish. We're working on a deal right now where we signed them up in our Pathfinder consulting program a year ago. And they said, hey, we've got this target we want to sell for 35 or 40 million or whatever the number was. And we sat down and said, okay, based on where you are today and what your trajectory looks like that'll be 3 or 4 years. Great. We'll start to work on things. Well, we got in, we started working with them. They ended up growing faster and they're now at market. So a year later. And we think
Oh,
they'll
wow.
more than
Okay.
hit their target. And it's interesting, more often than not, we see that happen mostly just because the business owner is much more intentional around growth. They're much more intentional around value creation. And when that happens, that accelerates that timeline typically. But we've also had clients we just did a deal last year that was about $500 million and we worked with them for about 7 years. So, um,
Okay.
uh,
Okay. So it's
all over the
kind
map.
of all over the
Yep.
map.
Yep.
Yeah. Makes sense. How about operationally? You mentioned, sometimes if the founder's strong in sales, there may be lacking some things on the operations side. What are some of the things that you see that are kind of preventing folks from being truly marketable on the operations side? Maybe they just haven't put something into place.
Yeah, I mean, you can identify operations challenges in a business typically it depends on the type of business, but if we're having product or customer issues, that usually
Mhm.
is a reflection of, hey, we've got some processes that are broken or not well defined. And again, up to a certain point in the life cycle of a business, the business owner can muscle their way through that. They can just, by sheer force of will, they can make those customers happy or make the processes work. But as they start to scale, that becomes less and less doable. It's very difficult to manage at scale. And so we'll see those issues, right? When you're doing, customer net promoter scores or customer sat surveys or returns or, hey, we've got quality issues in the field. All of that is usually evidence of, hey, our systems and processes are either broken or not as well defined as they need to be. And then it's really just identifying, hey, what's the specific type of resource that we need to get into place? Sometimes that might be a consultant just to come in and help them define and either productize or standardize their processes. Other times it may be, hey, we need to bring in a chief operating officer who's got a lot of experience building and scaling operations, in that particular industry or that particular type of business. But it's my old mentor used to say, there's probably there's a finite universe of common business problems, and they're the more you see them, the easier they are to diagnose, and it's easy to design what the prescription ought to be.
Yeah, no, that's very true. How about record keeping and like accounting and stuff? Do you ever? Are there sometimes times when you're going into work with an entrepreneur and you're like, okay, we got to clean this up. So
Yeah, almost always, Keith. And
okay,
by the
okay,
way, every entrepreneur tells us, "Oh, our books are the cleanest you'll ever see." Right? These are going to be the best books and records you've ever seen. And by and large, look, they're probably fine for their purposes to run the
right,
operations of the business. They've clearly designed their financials and accounting to help them do what they need to do to run the business. Unfortunately, in most cases, that's different sometimes from GAAP, right? General accepted accounting principles. And it's
right.
probably different from what a buyer is going to need to see in terms of evaluating the company. And so, for almost every client, we're recommending that they bring in an outside firm to assess their accounting and to fix any issues that we see in the accounting, get those ironed out, prepare what we call a seller's quality of earnings report. So we're really digging deep into the financials and presenting the financials in a way that we know buyers will be able to digest and understand. But that takes some convincing as well, again, because those are dollars that are not invested in product development or operations or sales, right? That's all in just making things cleaner. But literally every business that we deal with requires some level of fixing with respect to their financials.
Yeah, makes sense. Makes sense. I do real estate, and it's the same thing. I mean, oftentimes when somebody goes to sell something, you're like, wait a minute.
Yeah.
Yeah, what you're reporting as being your net operating income doesn't really
Yep.
seem to jive with what I'm seeing here.
Yeah. You got
So
got to follow the cash.
that's right, exactly. Well, yeah, that's interesting. So what are some of the other? Are there any other services that you provide, or that that you feel like the entrepreneurs can benefit from working with you and your firm?
Yeah, it really comes down to what we've tried to do in our business is really just surround that entrepreneur with what we know based on experience and having done this 100 times. Hey, this is going to be most useful for that entrepreneur in this journey of kind of planning, executing, and then ultimately harvesting value from their business. And
Hmm.
we're a second set of eyes that's got a lot of experience knowing what the end of that movie looks like. And so it's really just
Right.
giving them the test ahead of time so that they can practice a little bit before, we go live and, start talking to real money and, try to maximize what they get out of their process.
How about exit? As far as the exit itself, are oftentimes is the owner having to stay on for X amount of time? What are some options when it comes to that? And I would assume that there's at least from time to time somebody that maybe they don't need to take all the capital from the business and from the sale, and it almost be better for them not to from a tax liability standpoint.
Yeah, it really depends. This goes back to what's the owner trying to accomplish. What I would tell an owner if they wanted to be retired in 5 years, they should plan to
Mhm.
sell their business in three. And the reason is you want to be able to, with credibility and integrity, tell a buyer of that business that you're around at least for a couple years to help them effect a really good transition. And I firmly believe that as a business owner, you want to do that because if you care about your team, you care about your customers, you care about your reputation, being deeply involved in that transition and helping to orchestrate a really smooth transition is in your best interest. I think the other reason is it it will definitely increase the perceived value of the business to an outsider because if a business owner communicates to buyers that, hey, as soon as I sell the business, I'm out, that creates
Yeah.
a lot of risk in the minds of an investor, which is going to equate to a lower valuation for that business. And so, again, I think it's in our client's best interest to be willing to stick around. It's not to say that they will stick around for 2 years, but they need to be willing to do that credibly and again with integrity. But it's quite possible that in a year, the transition's been effected, it's gone well. They can go to that new, their new partner or buyer and say, "Hey, I think it's time for me to transition." As I like to tell clients, as long as there's no flash cuts or big surprises, hey, you can manage anything. You definitely don't want
Yeah.
to. I don't think it's fair to a buyer just to show up one day and say, "Hey, I'm out." That's not going to do you any favors, them any favors, your team any favors, the business any favors. And so, being, you know, thoughtful about it, right? Kind of the golden rule in terms of how would you like to be managed if you were in their shoes. But again, for a lot of our clients, they're if they want to retire in 5 years, hey, plan to sell in 3 years, which means you probably got to start planning now.
Okay. And what about as far as the sale itself and the capital that they receive from it? Is it usually a clean sale? Here's what you were expecting, or their owner finance terms? I mean, what or stock options or
Yeah, it'll vary. If it's a
okay,
big public company, for example, that's buying the company, typically they'll just pay all cash. They might hold some back for escrow claims or breaches of a rep or warranty in the purchase agreement. If it's a private equity firm, they're typically going to ask that business owner to roll some of their equity into the new entity, so that hey, before the deal, the business owner might own 100%. After the deal, they might own 30% of the business and work with this
hmm,
new partner of a private equity firm. We try as best we can to stay away from any owner financing or big earnout components. We're trying very, very hard. And when you run a competitive process, you typically get deals that don't have any contingent payments for the most part. You might have, a small
okay,
amount, but generally our advice to our clients is if the cash at closing is not enough to meet your stated desires and needs, don't do that deal. The rest of that stuff
Right.
is much more speculative and harder to wrap your arms around. And the last thing you want to do is sell your company only to have to go back to work at some point because it didn't work out.
Yeah. Yeah. Makes sense. All right, Chris. Well, let me ask you this: how can people find out more about you, and yeah, and if they'd like to work with you, what is that process like?
Sure. Yeah. Our website, www.class6, class VI, Roman numeral 6, partners.com, www.class6partners.com, or Chris at class6partners.com is my email address. And, be happy to, we do a lot of pro bono work for entrepreneurs just because we believe so much in what they mean to our communities. And so we're always happy to help entrepreneurs, even if they're not going to become a client.
Okay, okay, or at least maybe even take a look at what they've got, and
Sure.
how you can be of assistance.
Of course.
Makes sense. And then what when you're not busy working with entrepreneurs, Chris, what do you do outside of work?
Oh, I live in Colorado, so, mountain bike and cross country ski and fat bike in the snow and played a little
Yeah.
golf and but yeah, it's we live in a great state and lots of sunshine here, so it's easy to get outdoors.
Yeah, for sure. Okay. Well, I got two more questions for you that I ask
Oh, good.
everybody. So, and we'll put a slight twist to this one. Typically I'll ask somebody that's starting their real estate investment journey or investment journey. But how about somebody that's maybe they're a new entrepreneur? What are some of the things that you think from that they should put in place at the very beginning, in order to get where they're trying to go the quickest?
I'm a big believer in surrounding yourself with objective advice. And so that doesn't need to be a consultant or a firm like ours, but I'm a big believer in Vistage, which is a CEO group that is around the country. But having folks that you can turn to for some unbiased, completely objective feedback, because it's lonely being an entrepreneur and you're going to have to make a ton of decisions. But having people that you could turn to and that don't have an agenda other than just giving you their unvarnished opinions, that can be super helpful, particularly people that have been there. Finding a mentor who's been there and done it, that can help you think through some of the challenges that you're going to face. And then I'm a big reader. I think a lot of entrepreneurs are. They're lifelong learners, and that's one of the reasons why we love them. But
For sure.
hey, being thoughtful, shoring up areas where you think you might have some exposure. But those are I mean, in terms of advice to a new entrepreneur is, hey, just make sure you've got folks around you that can help you think through these things.
Yeah, I think that's really good advice. I'm a firm believer in that as well, and member of various masterminds. And I mean, it's amazing to get, even if it's somebody that's not in the same industry, but they're another, like you said, another CEO.
Oh yeah.
They're gonna, there's certain things they're doing that, and problems that they've had to overcome that are going to be the same that you're going to have to overcome.
It's
So
I would say it's almost impossible that a challenge that you're facing as an entrepreneur, someone, in a group of 10 CEOs hasn't already
has
faced, right?
That's right. Yeah, exactly. All right. Well, so you're gonna like my last question here, just because you said you're a big reader. So, how about a book recommendation?
Oh,
Anything that an entrepreneur should read, or just a book recommendation in general?
well, one that I have given to all my kids, I think it's now out of print, so it's a little more expensive to find on Amazon. But I'm a huge fan of Charlie Munger, who was Warren Buffett's business partner. And there's a book called Poor
Yeah.
Charlie's Almanac by a guy named Peter Kaufman, who basically summarized a lot of his speeches and talks around the country. It is full of really, really good life advice, and I highly, highly recommend it. I usually read it once every other year or so.
Really? Okay. All right, cool. I'll have to look that one up because that's a new one for me. So,
Good.
well, Chris, I've enjoyed our time together, and I really appreciate you taking some time to be on the Wealth Flow. And um, I think you've brought a ton of value to our listeners. So, thanks so much.
Well, thanks for having me, Keith. Appreciate it. And thanks for doing what you're doing.
Appreciate you. Thanks.